Let's start with the Brent crude oil prices, and they are hovering around 107 a barrel. You have seen prices break below that actually, but with 0.5% of a gain coming in on your screens right now. There have been worries about supply from North Africa, but it also is the speculation that the strong US data could prompt the Fed to further taper its stimulus that is capping too much of gains in this space. In this week, yet again, we have seen a decline coming in. It's the second straight week in 2014 that you have seen the declines coming in for the energy space there. The gold prices in the meanwhile also have seen some choppiness coming in. They are trading higher at this point as the dollar has come off its 7-week highs, while investors look ahead to the US non-farm payroll numbers in the evening for further cues on the health of world's largest economy and what that means for the Fed's monetary policy meeting. Sijin Cheng is commodities analyst at Barclays, and he joins us on the show from Singapore for the take on all of these commodities. Sijin, hi. With the new financial rules now being announced in China, do you see an after effect of that in sense of the curbing of raw material demand in much of Asia?
Well, tighter financial policies usually can curb some demand at the margins. But actually, counterintuitively, if you cut off the type of financing in one area, you could actually encourage financing activities in regular imports. We saw in 2013 that when China tightened rules on the financing of metals in warehouses, Chinese importers actually just sold copper domestically, and that actually led to a rise in imports. So we do think that there is an impact at the margins, but it could be different than what people think.
Sijin, also the base metal prices have started 2014 on a positive note, and there is support on decline in inventories as well, especially for copper, where the LME inventories now are at 1-year lows. Do you see further strength from here on, at least for the metals which have seen decline in inventories?
We think that prices will likely remain elevated in the short term. We think that Q1 in 2014 would likely be the high point of the year. But as the holidays come forward in China, a lot of the physical activities that support prices will tend to become more muted. And we think that there's a chance that greater supply later in the year will actually weigh on prices, and prices could actually grind lower.
Sijin, what's your sense coming in for the other metals where the supply surplus is coming in for nickel and lead, and that seems to be weighing onto the prices? What's your reading on the supply, demand, and the prices for these couple of sectors?
Nickel has been suffering from a surplus for the past few years, and still there is a surplus in 2014. So the fundamentals in terms of inventories and also in terms of higher supply do not look very positive. We do think, though, that if the Indonesian government actually implements some sort of export restriction on nickel ores, that could lift prices as the cost floor would rise. That now there are some uncertainties over whether Indonesia would go ahead and do that. So we're going to have to wait and see until next week if there are any sort of restrictions. Lead is also seeing more production increases, although we're a little bit more positive on lead fundamentals. We think that if you exclude China, which cannot export its surplus, the rest of the world actually is showing a deficit.
Sijin, what's your sense also coming in for the precious metal space, especially the gold prices, which did see some gains in the previous week, but this week really seems to be going on the downslide?
Our forecast from this point on does look a little bit more positive than where prices have been in the past few months. For the full year of 2014, Barclays' forecast is $1,310 per ounce. So that is a little bit more positive. Although if you compare that to 2013 prices, gold prices are certainly coming down. The main reason for that, of course, is a lack of investment demand after the Fed begins to taper its balance sheet purchases.
All right, final question, Sijin. And most people feel that after underperforming in 2013, most of these metals overall may see some buying interest in the current year due to the improving economic recovery. What's your view on that, and how are you getting into the new year? With what kind of positions?
We think that on balance, when the U.S. recovery becomes more certain, when the Chinese economy and emerging markets deal with some of the headwinds in 2013, this year would likely see a bit more positive sentiment and also some support from demand. But we do have to point out that in China, where 40% of global metals are consumed, economic growth is still expected to be relatively slow this year. Barclays forecast is 7.2%, and we think that that would not be enough to really engineer a turnaround in metals prices.
All right, Sajjan, we'll let you go at that. Thank you so much for joining us with your sense. That's the view coming in from Barclays, expecting a moderate, balanced 2014 when it comes to the metal space. But let's also get on board then. Vibhu Ratandhara, he's AVP Commodity Research at Bonanza. Also joining us is Vijay Bhambani, who's author and CEO at bsplindia.com. Vijay, the first question to you really, and this is really on the energy space. We have seen a second straight week of decline coming in. It doesn't really look so good because we are making lower lows now in case of the crude prices. How much further decline, or where do you see a support coming in now?
Manisha, ever since we violated the 5,830 level, which we talked about a couple of days ago, crude has been on the back foot, and I wouldn't really be surprised to see further declines. Any kind of a blip up you're seeing is mostly due to short covering by bears who are sitting in the money on shorts initiated at higher levels. They are booking their profits and therefore providing a temporary cushion. I don't think the 5,700 level is sustainable. I think it can see lower levels also. In the interim, you might see short covering based upthrust, but it's going up only to fall down again. So even if you do see 5,775, 5,780, I'm a little jittery about buying.
Vibhu, what's your sense now? How are you looking at the crude oil prices, natural gas prices for the intraday trading today?
Definitely. It's look like on the southward journey only. As what Vijay ji has said, it's already broken an important support level. So technically, it's look quite bearish. On the fundamental side, again, any tapering or any increase in the dollar index against the rest of the currencies, that will be bearish for the energy pack, and it's what we had seen in the last few of the days. Again, some of the supply side is likely to be resolving, and might be a geopolitical tension will be resolved within a very short while. So that again pressurize the energy pack, and I don't surprise if we can get somewhere around 5650 or odd 5600 level in the domestic market within a very short while.
Fair point. Vijay, we are awaiting the US non-farm payroll data at this point. The ECB and the Bank of England meeting yesterday has been pretty much on the expected lines. No much changes coming in from that one. What's your sense on this data? Because how the further tapering would be done in 2014, or rather for the next couple of meetings, would depend on this one.
Manisha, the central bankers are endeavoring to keep their efforts to reflating their economies on track, although the liquidity tap might just be a little tight as compared to 2013. And that is what is likely to exert downward pressure, because easy money is likely to be a little more difficult to come by as compared to last year. And that is likely to keep industrial metals and energy also under pressure. So I think even your non-farm payrolls, if they are basically indicating a turnaround in the economy, there are again fears that the liquidity tap might just be restrained, and that will lead to volatility with a downward bias. So I'm in no hurry to bottom fish. I'm not writing out checks in a hurry, and I would want significantly lower levels before values appear to be compelling enough to buy.
Especially for gold, Vijay, how would you want to take a look at that? Because we have seen some rebound into that one yet again. 1230 is back on screens, at least in the international markets. Do you think from here on it's more about consolidation than perhaps selling rallies?
I think consolidation might be seen in the absolute near term, because prices have been down and they've been driven down relentlessly in the last couple of months. But upthrusts, if any, are likely to encounter selling pressure at higher levels. I don't see gold going past 1260, if at all, 1280 on the upside, and there again the decline might just commence all over again. Ditto with silver. I think silver also is likely to remain under pressure till it trades sustainably above 45,500 levels, especially on weekly closing basis. Unless that happens, I think rallies are likely to get sold into.
Vibhu, between gold and silver, which one are you tracking right now, and what's your sense on what could really come in from the non-farm payroll data and its impact on the prices as well?
I think definitely non-farm payroll data will directly impact bullion prices, and particularly on the gold prices. Again, one of the point is what we had in the last few days, whenever the gold prices rebounded towards 1240 or 1260 odd level, we had seen a very good selling from the ETF side also, which indicating the investors also exhausting at the higher levels to divert their money to other asset class. So this it looks like we might see some more bottom in the coming days. And as far as the domestic market is concerned, I think very short while 28,800, 28,600 is the very good support level. Very soon, if the data is online and if the data is bearish for the bullion prices, we might see within a week time, we might see somewhere around 28,200 or 28,150 level also.
The base metal space then also has seen some bit of a buying coming in today. Of course, it was the currency which led to some capping of gains there, the appreciation in the rupee there. Vibhu, how are you looking at this sector and what's your sense on this one now?
Yes, definitely. Some short covering we can say, or some support from the currency side that looks in the today's market. Looking ahead, I think the biggest problem for the base metal is China demand, which is not picking up. Generally, China's demand picking up for the New Year demand is stockist demand is picking up before 3 or 4 weeks, which didn't turn out till that. So I think that will be pressurizing the base metal pack in the last few of the days. And rest of the factor, what we had seen, some of the stock is exhausting. Copper is almost at 1 year low. Copper LME stock is 1 year low, which is seeing a temporary problem. And I don't think so that will be affecting the overall surplus of the copper current year. So that for the short while, I think every rally will be a selling opportunity for the target of somewhere around 444, or I can say 441 also for the copper prices.
Vijay, to you as well. I mean, we have seen a division of fundamentals when it comes to the base metal sector. Nickel and lead, of course, are in the supply surplus when we get into this new year. And it's copper and zinc which perhaps would see more demand than anything else. Are you also divided when it comes to perhaps strategizing these?
I would prefer to go on a case-by-case basis and would rely far more on technicals as compared to fundamentals. Of course, fundamentals do count here. But if I was to get nickel at lower prices of say 822 to 828 band, I think I don't really mind taking a punt on the long side with a view to take about 1.5% in profits. Copper, you're right, it may just tend to be bought into at sub 445 odd levels. There will be some amount of short covering base buying, which a high risk trader might want to capitalize as a short term trade. But barring that, in the short term, the pressure remains. Upsides are likely to remain very, very capped. And if you do see upthrust of more than 1.5%, probability is it'll get sold into.
Let's take a look at the agro commodities now, and we have seen the sugar prices continue to be under some pressure. Ditto is the case with wheat as well. After much gains in the previous couple of weeks, there's 0.25% of decline coming in for that. There is sugar there, 0.2% of a decline for that one as well. And edible oil as a space also has been under some pressure, so some profit taking there across CPO, soybean and soy oil. All of these three commodities have seen nearly 0.5% to 1% of a decline coming in. Vijay, to wheat prices first, but we are looking at a higher crop, but as has been the talk, the MSP is higher, so there's as much decline that you might see there.
You're right, Manisha, and I would stick to my view I gave out yesterday that the top in wheat is made. And currently the prompt month futures on the NCDX has closed at 1674. I think it's unlikely to even test 1700. While the MSPs are a supporting factor, the higher crop and the higher buffer stock, plus the difficulty in exporting any surplus is likely to act as a dampener on prices. And I think if you do see wheat prices exceeding 1688 levels, it makes more sense to short wheat. Especially if wheat falls below 1665 or 1660 levels, the downside might accelerate and wheat might just as 1625 to 1630. So this is a case for shorting the rallies.
Vijay, also, how are you looking at the CPO prices? Today has been a weaker day for the edible oil sector. Do you see it going forth as well?
I had advocated a price of sub 540 levels on the MCX prompt month futures. We are seeing 536. I think now I need to revise my bearish view even more bearish and say that even 530 may not hold, because both Indonesia and Malaysia are amply supplied. Plus, you are now seeing the pressure coming in from the USD INR. As the Indian unit strengthens against the USD, the landed price of imported edible oil, especially CPO, which is largely of import content, is likely to become cheaper on the domestic shore. So I would bet on CPO prices going below the 530 levels. At 540, 541 levels, I don't really mind taking a short call.
And finally, one quick word on the sugar prices also, Vijay. How is that seen? Because we seem to be getting into a surplus fourth year in a row now.
Manisha, the 2,700 level in the prompt, the mid and far month futures does remain support that I would think will hold. The bulls will be able to defend that, hopefully. And at 2720 odd levels itself, I don't really mind going long into sugar in the mid and far month futures, because I think prices will start to accelerate as we come closer to April 2014.